The government has put Yes Bank under moratorium. The RBI also superseded Yes Bank's board. Joining us now to talk about the implications is independent banking analyst Hemindra Hazari. Hemindra, thanks very much for taking out the time. A quick comment, obviously, a lot's been spoken about the protection of depositors and nothing's going to affect them in any negative fashion. But just the fact that, how does one look at the PSU entities now that every time there's a private bank or a private entity that goes into trouble, there is a possibility that a PSU may be arm twisted to come and bail it out?
But you see, this is the economic model that we have adopted, that when there are profits in the private sector, it goes to shareholders, and when there are losses, they have to be borne by the taxpayer. That is the economic model that so far has evolved in India. And therefore, normally you'll find that for shareholders, there's a lot of upside and very limited downside. Of course, in this case, it appears, and very rightly so, that the shareholders of Yes Bank will not get anything and should not get anything. At least you have to see whether, the depositor liabilities will be met. So I think this is the state that we are in. The economy is in very poor shape. The banking sector is a reflection on the economy. There's been a series of mismanagement at Yes Bank and other banks in India. It is most unfortunate that the boards, the auditors, the regulator, business media, the analyst community has not called it out when it should. And today, and even before this moratorium, when the bank was down, everybody was coming and being critical of the bank. My question is, you should have been criticizing the bank when Rana Kapoor was in charge. At that time, the media was giving this bank Best Bank Awards, Best Banker of the Year awards. The entire system has been corrupted today.
Yeah. Hemindra, what happens now, though? I mean, one is Yes Bank. I heard you mention that Yes Bank shareholders could get nothing. You reckon that that's the way the stock is headed as well?
No, most definitely it has to be, because why should anyone bail it out, right? I mean, the shareholders themselves should have bailed it out. The very fact that today shareholders themselves are not willing to bail out and get the required funds for this bank. So therefore, that is why the RBI has taken this decision, because it appears that the losses are far in excess of what the last reported numbers have informed us.
Right.
Now, mind you, in my opinion, either the bank has to be merged with another larger entity, or the depositors have to take a hit, which so far in a commercial bank that has not been done. But this idea that it can survive as an independent entity, if you get certain prominent names like State Bank of India, LIC, or whatever, some of the private banks who take an equity stake, and that will revive, shareholder confidence. I think by now that time has gone.
Well,
because
the RBI,
the largest...
Yeah, I mean, I'm saying the RBI has already said that depositors' money is safe. So likely that maybe that implication is out. But then, therefore, that brings the larger question that, one, do you think that the merger is even possible? And Hemindra, part two, what does this do for State Bank of India? Because this is not as bad as what people would have earlier thought, that it will be forced to merge. It's now taking, or arguably taking, a stake. Is it a case of glass half full or a glass half empty?
No, see, that's the point I'm coming to. Today, in my view, anyone taking a stake in this bank, it is not going to solve the problem for Yes Bank, because the bank survives on its deposit franchise. The moment the government and the RBI has announced a moratorium, it has lost its deposit franchise. Because as soon as the moratorium is lifted, no depositor will want to keep his funds there, because why should he be? Now he's restricted for only withdrawing of 50,000 rupees and maximum 500,000. He has to show a lot of paperwork. So the moment the government or the regulator announces a moratorium, the deposit franchise of that entity, in my opinion, ceases to exist, and therefore it cannot survive as an independent entity. That's when it will lose its deposit franchise immediately. As soon as the moratorium is lifted, it's an independent entity, all the depositors are going to start pulling out their funds. And this is what people have to realize.
And once the bank... Yeah, and obviously the fact that, they are going to be putting in some money, if at all it comes as a stake buy, what happens to, further capital raising if they do need it at some point? Because the money that they're going to get probably, if it is a stake buy, will be at a much lower valuation, and that will not be sufficient for them to continue with operations as an independent bank, having stakeholders like SBI or LIC or whichever other investors come in to pick up stake. So the viability and the business longevity gets questioned.
No, very true. But the point is, who are the largest stakeholders in a bank? It's not shareholders. Shareholders are minority stakeholders. Because of debt equity being 7-10:1, it is the deposit franchise on which a bank, survives. And if you take that away, when you have a moratorium, your deposit franchise is over. No depositor is going to trust that entity again. You may say that, now because SBI has come in, therefore it will attract. It may attract other equity investors, but the depositor is going to run away. Naturally, why should? Because now he's been restricted. So the moment the restrictions are off, he's going to pull out his money. So therefore, the only solution for this is to protect depositors' money, is to merge it with another bank. I don't see Yes Bank surviving now as an independent entity. You may get SBI, you may get LIC in, but its deposit franchise is over.
Hemindra, but I'll just come back to my previous question then. What about State Bank of India? How do you view this decision from an SBI shareholder's perspective?
So from an SBI shareholder's perspective, it is negative.
Okay.
I mean, either it's going to be hugely negative if they take on all the liabilities, or if they take on part of the liabilities, it still remains negative.